Hi, guys. This is Gian Roberts with the Retire Younger podcast. Welcome back to another episode. In this episode, we're going to talk about Airbnb and its potential collapse in 2023, some of the factors that I see coming up for Airbnb, and the recent closure of Redfin's RedFinNOW program, which was their direct buyer program, and how this will affect Airbnb in the future and how it's affecting Airbnb renters right now in the market. All right, Redfin cuts 13% of its workforce and shuts down the home flipping business called RedFinNOW. Redfin will wind down its home flipping program, RedFinNOW, and lay off employees for the second time this year as it cuts expenses and responds to slow housing markets. The Seattle-based real estate brokerage announced Wednesday that it will eliminate 862 positions, or 13% of its workforce. This is the company's second round of layoffs this year, following an 8% workforce reduction in June. Redfin headcount has dropped 27% since April. Redfin stock is down nearly 10% on Wednesday. Shares are down more than 90% for the year. Redfin's inventory is valued at around $265 million, and another $92 million is under contract for sale. The company expects to own less than $85 million in homes at the end of January, and then completely rid of its inventory by the second quarter in 2023. Redfin said it recorded an $18 million loss related to RedfinNOW, according to its purchase price in 2022 at the higher prices. And RedfinNOW is currently estimating the values to be much less than what they purchased them for. So they lost $18 million right there. And Zillow did a similar thing last year. Zillow had an iBuyer program as well, and the results was a $405 million write-down or loss, and they reduced their workforce by 25%. Opendoor is a leading iBuyer company, laid off 18% of its workers early this month and reported a nearly $1 billion loss in the third quarter. So all these iBuyer programs have been reducing because of the actual price that they purchased the house for. The value of the house has decreased, or what they could resell it for has decreased, and they actually bought it for more than they could now sell it for. So they now have to record a loss because they can't sell the houses for a profit. And this is going to lead into what I see as the problem with Airbnb. Airbnb coming up is this debt crisis, actually purchasing the homes for more than they can actually resell them at. And I'm going to explain this more as I go in. But it's based on the law of supply and demand, as you see on the slide. Other factors here that are causing Airbnb to have issues are inflation increases the amount of cash flow that they get from their individual properties. The owners of these properties who list their properties for rent on Airbnb are now facing inflation, and inflation causes the cost of insurance to go up, the maintenance cost to go up. Other factors are the mortgage rates, the interest rates on their loans, and the interest rates on the mortgages themselves. So new buyers that come in to purchase a home have to pay a higher rate of interest, so there's less buyers in the market. Other factors are laws and restrictions against Airbnb, homeowners associations, and other organizations. Illegal activity that are happening inside these rentals has increased the amount of laws and regulations and restrictions placed on Airbnb homes, which increases or decreases the cash flow that comes into these investments for the actually homeowners of the Airbnb properties. Employment and layoffs is another factor. There's been a lot of layoffs in not only in real estate, as you just saw, that they laid off a good percentage of their workforce, but also in the tech industry, there's been a huge amount of layoffs as well. These layoffs and unemployment increase the amount of potential renters or short-term renters in these properties. So that's going to affect the overall cash flow on these properties. The cash flow is very tight on these properties. For instance, the reason why people listed their properties on Airbnb was because of the increased cash flow that they can get. So if they had a traditional renter in there, they would pay a monthly rent of around $1,000. So that's $1,200 a year minus expenses, which gave them about $2,000 cash flow. So that was only a 10% return on their investment if they put $20,000 down. Airbnb model was that you could get short-term renters in there, and let's say you could rent it out 3 to 6 times a month, you would increase your monthly rent to $3,000 a month that you would receive from that property, the same property, but you would increase the rent in that property to $3,000, giving you $3,600 worth of income, same $10,000 worth of expenses, giving you a $26,000 cash flow, which is a return on your investment, cash on cash return of 130%, as opposed to the 10% that you would get with a traditional rental. So this is why people do Airbnb, because they can increase the cash flow in their property and make more money with the same property. That turns into cash flow or profit. But the problem is that these companies stop the iBuyer program. All these properties are to be sold on the market, and this increase in the volume of supply, the prices of houses have gone up steadily over the last decade or so, and so the house values are higher than they were before. People that bought the Airbnb property bought the property. It was at a higher value. They didn't buy it at a discount. They bought it at the higher rate. Their loan value was the higher rate. Therefore, when these new properties come onto the market, it increases the supply, which pushes down the housing prices. The value of the house was worth $500,000 when they purchased it. It is now, or will be soon, valued at $400,000, giving them a $100,000 gap there between the purchase price and the actual resale price of that house. The inflation and the interest rates have gone up. The number of buyers on the market has decreased. The value of the houses have decreased. It is now harder to find a buyer for your property. Instead of using a traditional mortgage on these properties, they use a vacation home loan to purchase these properties, which decreased the amount that they had to put down on these properties. So instead of the 25%, they only put down 10%. So they have less equity in these properties, also causing a problem because now they have a larger debt. And it goes back to the cash flow on these properties. The margins are very narrow on these properties, even with the Airbnb. Now, one of the problems with Airbnb rentals is not consistent income, right? It's a seasonal income, and there might be vacation seasons where people rent out that property, and then there's seasons where there's no rentals on that property. So that being said, compared to a traditional rental situation where it's a steady monthly income, you might have spikes in your monthly income causing a pressure on your cash flow. Like I said, vacation rentals are seasonal, and most of these Airbnbs are vacation rentals, and the seasonality of this affects your cash flow on the property. Here's an example of a real property. Basically, the mortgage is steady at $3,059 a month, and the revenue, if you look down here at the revenue column right here, it's $4,000 this month, it's $1,000 this month, it's $500 this month, it's $1,100 this month. The total revenue for this property for 4 months was $6,970. So about $7,000. And the actual expenses was $16,000, adding up all the expenses with the water, the electric, the pest control, maintenance, and all that was $16,490, leaving a deficit of $9,500 roughly. But they had some cash in the bank, so they had $25,500 in the bank, which they took the deficit of the $9,000 from, and it still left them with a deficit of $2,800 at the end of the day. So that's a negative cash flow that they ended up with on this property. This is in the economy. The stock market has been down recently. There's been layoffs and job security problems. Less people are going to be able to spend money on short-term rentals. Deficiency in income on these properties is going to increase, especially in 2023. The increase of the number of houses on the market projected to double with these companies not doing the iBuyer program and putting these houses back on the market. The increase in foreclosures is going to put even more houses on the market, even doubling the amount of houses available for purchase on the market, which will put a downward pressure on home prices. Less people are going to be going on vacation because they just simply don't have the money to do so and do short-term rentals. The downward pressure on the housing is also going to decrease the value of the house. So if they bought it for $500,000, they have to sell it for $400,000. There's a $100,000 loss. That's what these big iBuyer companies were talking about. That the one had $1 billion loss, the other one had $18 million loss. There's millions of dollars being lost here just from the downward pressure of these home prices going down. Ultimately, this is going to go down to the individual investors who invested in these Airbnb properties, decreasing their cash flow, have to default on their mortgages, and possibly being into a negative cash flow situation, which will ultimately lead to possible collapse of Airbnb. So that's my theory. I hope you got some value from that. Now, if you don't know who I am, I'm GM Roberts. I wrote a book called Retire Younger. We work with investors with 1031 exchanges, self-directed IRAs, family home offices, REA hedge funds, high income earners. If you're one of these type of people, I'd like to talk to you. Go to gianroberts.com, get on a discovery call, and I can show you some of the opportunities we have available for you. We invest in single family residence and business acquisitions. There's 3.5 million businesses up for sale. This is the perfect time if you're an investor and you have some capital, the best time to purchase real estate and to purchase businesses at their lowest price. And we get deep discounts, giving you a stable, high yield investment that you can hold on long term and get cash flow, because we're not going to buy at the top of the market. We're going to buy at the bottom of the market. And that's why we like to work with investors. So if you're one of those investors or you want to be a facilitator for one of these investors, give me a call. Go to gianroberts.com, click on the discovery call. It has my calendar on there. Just simply schedule a call. I'd like to talk to you. There's no obligation or anything like that. Also, if you are just a person who wants to make extra money and you have a heart and compassion for seniors, these are people, elderly people that need to move out of their homes into assisted living, long-term care. You want to help these people do so without the financial burden that comes along with moving into long-term care, which is $4,000 to $8,000 a month, depending on your area. A lot of seniors don't have the capital for that, but we can provide the funding for that for their long-term care. If you want to help them and network in your local community and reach out to them, it doesn't cost anything to get involved with this, but you can make up to $5,000 to $10,000 a month. And I can show you exactly how, using this brochure that you see on the screen and reaching out to people in your local area, finding a need, and then showing them how we can help fund their long-term care in senior care. If you're the type of individual who just wants to get started with their first cash flow business, the easiest one to start is affiliate marketing. Affiliate marketing is the easiest because all you have to do is create videos like this, produce short form videos, and promote the simple top 100 affiliate list like I show you here. On my website, if you go and click the first link, sign up with your email, I give you this free list of top 100 affiliate programs, and all you do is download this list and then click on each link and then go and sign up for their affiliate program. I'm not saying purchase their products or services. I'm saying click on the link and go to the bottom of their websites and click on their affiliate program, apply for their affiliate program, replace your link with my link on this spreadsheet right here, and then you'll have your top 100 affiliate links. Now you can go through these individual programs, and inside the members area that I give you access when you left your email, I give you access to my mini course, which shows you how to train people on how to use these products on this 100 list and how to make money with those. So when you train people to do that and you tell them to download their own list and they end up making money with their own using these software and services, then you get paid a commission. It's the easiest way. It doesn't cost any money. It just costs a little bit of time. If you don't have any capital to invest, this is the great way to do it. The easiest way to do it is by promoting this through YouTube Shorts. And I give you examples inside the mini course on how to create these YouTube Shorts. But you got Facebook Reels, you got YouTube Shorts, you got Instagram, you also have TikTok videos. And this is probably the easiest way to create a lot of views very quickly and get started with affiliate marketing. One way that I can recommend is using private money. And if you want to learn more about private money, then watch this video right here. All right, we'll see you in the next video.